Okay, hello, folks. Welcome to my new webinar. I am David Russell, Global Head of Market Strategy at TradeStation. And today we're going to start a new webinar called State of the Market. I still have the same PowerPoint to show you guys a few disclosures. And just so you know, my goal for this is going to be just to look at the indexes and look at weekly and daily charts. We're not going to get into anything with individual stocks or anything else like that, or any kind of economics, really. The main goal is just to do a kind of clear focus on the weekly levels and some of the things, especially in the weekly charts of indexes and the sectors and things like that. I've recently found that to be an increasingly useful way to look at the market, so I wanted to share it with you guys. I'm also going to share some links very quickly here. Now, we are going to be looking at ETFs. Those are a useful way to look at indexes. So I'm going to be sharing also the ETF disclosure page, and I'm showing you standardized returns of select ETFs that we will be discussing today. Now, I also want to just mention, if you go to TradeStation.com and you go to Insights, this will bring you to the blog that I run here. And then Financials Take Leadership as Mega Cap Sputter. Now, I'm not going to get into this article. I wanted to just tell you that some of the points I'm going to be covering are mentioned in this article. You can take a look at it. There are some very interesting kind of points in it. I was fascinated when I really looked at the numbers. I'm not going to be really getting into those too much. My main thing here is I wanted to show you these standardized returns of some of these ETFs. And now I'm going to be mostly looking at charts on TradingView because those have just allowed me to put some drawings on there. And then I know I'll never lose it because it's like in the cloud and it's not a TradeStation workspace. It's just on the cloud. So these are standardized returns. If you want to look at this article, some of the points that I'm going to cite will be in here. And like I said, it was a pretty interesting one because, with the financials taking over. But what I want to really just do now is I have a list of key ETFs here and the indexes that we all look at. I'm just going to start with the S&P. Now, the first thing I want to mention is we take a look at the big picture here. You can see in various things that this is a little inside week trying to form. We have two, negative big candles down. And now we're back to some levels here. Not surprisingly, we're essentially seeing, the index is kind of trying to hold here before, some of the, the news this week, like the Fed and jobs on Friday, big earnings from companies like Apple, Microsoft coming up. So the thing is, we're trying to stabilize here. And I also think it's interesting that given the kind of news and stuff we have, if we have, a positive kind of news to confirm, the optimism we've had so far, the pullback in this market, this is something that, people might actually be surprised if they are not, if they are negative. I mean, it could kind of the trend here is in a spot where people might look for the trend to continue. And then we said, remember that this market has been an uptrend. This is like not a big pullback, but it is a pullback. And this might actually be something that kind of gets people interested. Also, as mentioned, that if you look at the GDP data we had and the retail sales data we had, both stronger than expected, that actually could bode well for earnings coming up. So wanted to just kind of mention those points. Anyway, let's take a look now, just kind of here. First, we're going to look at the weekly chart. And we had the bearish outside week, and now we're trying to hold this level from back here in early June. Now we have a little inside week trying to form. That is a potential pattern that would signify that that could potentially signify that this pullback is ending, and it goes from being, volatile and big swings to tighter moves, which means stabilization, which could actually see people looking here at this level. This is an important level because we look here on this chart. This right here was when CPI came in, really cool. This was a really positive, or I should say, really not a high or not very positive CPI report back here, and then the market gapped higher. And now, if you look, we kind of went down, held that gap, and I think that's also something here that is definitely catching some people's attention. So if we look here, it's kind of 5406 level on the weekly chart. This is here a level that is the low. These are all weekly levels I'm working with on the weekly chart. And right here, trying to hold this level, I think that's the main thing. We also see a lot of the overbought condition on things like RSI have worked off. Stochastics dropped to an oversold condition here. And the other thing is, if you look on the daily chart, you can see that we had here an inverted hammer and an inside day and another inside day. If I actually go here, I can actually show you. There's this thing here with inside bars I can add on TradingView. And I want to just quickly show you. You can see here we have an inside day and another inside day. So tight inside days here also suggest things stabilizing potentially. So That's amazing. Of course, we have the rising 50-day moving average coming up. So holding right between kind of 5,400 and 5,450-ish kind of area is right now what people might be noticing as a kind of stabilization of the longer term uptrend with potential for more, potentially more upside. Now, we look at the Qs, which is the NASDAQ. This is the only one I'm going to use the ETF on the index just because the NDX, I don't think people look at as much as they look at the Qs. Again, it's very similar, of course. What's interesting here is we have this level right around the same spot from this area in mid-June, kind of 461, which is pretty important. And again, trying to form a kind of inside week here. I think this is just really the key thing. Now, if you look at this on a daily chart, you can see here, you see I have a weekly chart and a daily chart set up. We have this 10-day simple moving average falling sharply, MACD falling sharply. So the question now is, in my view, usually looking at things like this historically, look back here when it's falling sharply. Things tend to rally up and chop on either side, flatten out that 10-day, and then, if there is going to be continuation to the upside, it would want to flatten out that 10-day and then kind of get to the spot where it gets above, pulls back to it, and then continues. You'll see patterns like this different times, like even here, this kind of pullback. It has to kind of, the 10 days falling, it needs to get back on top of it. So right here, this is an area where it would also be consistent with what I'm saying, of a kind of period of sideways movement. But not enormously long. That might be kind of what it signals. When we look at some of the other things that are similar to the Qs, like the XLK, the XLY, and the XLC, those are all kind of, not surprisingly, having similar patterns. Now, the one that really grabbed kind of my attention, I did a trading view idea on this morning, is the Dow Jones Industrial Average. What's important, I think, about this one on the weekly chart is that basically we have here's an inside week forming on the Dow. So you can see right here, it's an inside week and it's above this high for May. This was the thing that was kind of most interesting to me. One of the patterns we've talked about a lot is when things close at weekly highs, they have that potential to continue higher. So, here we had a higher weekly close pushed higher. And now here we are with an inside week above the old high. And I think this is very interesting because a lot of people have talked about, the Russell's going to come back and all this optimism and, about a potential rally in the Russell. And that's not necessarily something that, there's evidence against. It's just a question that it doesn't have to be necessarily just a Russell if people are looking, because the fact is there's been a big concentration in mega cap stocks. And what is interesting as we keep looking down our list is what we've actually kind of seen is that other areas, in particular, industrials, financials, and healthcare, are starting to kind of show that potential that they are benefiting from money having shifted from the mega caps to other parts of the market. So I think it's interesting to kind of see that because the Dow includes some of those. The biggest sector in the Dow is the financial sector. So that's the Dow. Remember, this week we're going to have Apple and Microsoft reporting as well, which are obviously big members of the Dow. Now, if we look at the Russell, today it has something which is it tried to inch up above last week's high and kind of failed. It can be difficult when things try to break out early and fail. That can just kind of be a thing that can kind of be negative for sentiment. It's had a pretty significant move here. And at this point, if I kind of look at this, I don't really see, at this point, any nearby support. So I think we have to be on guard to recognize that, given this week with focus on the big story and other things like Apple and these other companies, given the sharpness of the move that we've seen so far in the Russell, some people might be waiting for something closer to a pullback toward 2,200 on the Russell. So just something to kind of bear in mind here. It is actually now, it has been outperforming, really sharply. And we talked at the time when this was happening about this breakout through this trend line. And that was something that has happened now. We did talk about it a lot as it was happening, but now we're also as a spot where you look at a chart like this, and there's just a lot of space here before people might see any kind of clear kind of support to be getting engaged. So given the sharpness of the move and the kind of false breakout this morning, this might be one where people are kind of a little bit more, waiting for a little bit of clarity before we get, much kind of significant action in this. All right, now if we look at the TNX, which is a 10-year, this is quite interesting because what grabs my attention on this is we've talked a lot about this important level that goes back to June of 2008. And this was an old high at that time, and it was a point where the 10-year peaked, and then it basically peaked there a few times, and then it broke above that. And this has been, in my view, a key long-term level. 432 on the 10-year treasury yield. What's interesting here is that basically now we're kind of stuck back below it on the weekly chart for several weeks now. And if you look here, we have lower highs, and then the lower highs are getting steeper. You could even draw another line, potentially. Now, I'm not sure if a line like this will last, but you could even look here and you could see that this is potentially getting even steeper now. Now, things like this are not necessarily going to continue, but I think the key thing about this to realize is we're stuck under this level now at a time when, the expectation of the Fed and everything else is coming together. We've also seen a steepening of the yield curve, and that is also kind of consistent with, it's consistent with the short end falling faster than the long end, but both of them tend to kind of shift lower. And when the Fed starts to, cut rates, as most people expect they will do in September. So I just think it's interesting to see this. And this is, I believe, the single most important chart, because if we continue to see, a decline in yields, that has knock-on effects across a broad range of different indexes and things. Okay. Now, as we look, the next thing I'm going to look at, work down my list, is the XLB. This is the materials ETF. And what's interesting to me about this is you can see it had this kind of falling trend line on the weekly. Now, this was one to me because we talked about this at the time. It closed at a weekly high right here. Now, this signal on these indexes, I have found to be very interesting and meaningful. When something comes off the lows and it closes at 52-week high, if you're like, I don't know, just kind of look at it. And then look how the next week it pulled back a little inside here. It kind of this was back in February. It got back a little bit inside, and then it followed through. And the thing I think is interesting here is that was a pattern back here. Now, it's not applying in this moment, but it is interesting. I remember just to point out this pattern that we've seen with the XLB. Now, from my perspective here, this is something where we do have a range-bound market for now. It's trying to break this downtrend, but at this point in time, this kind of level around 88, it's been just kind of moving sideways. And I think it's, when I look at this, it's still a spot here where it doesn't have any particularly clear signals. It's interesting to see it trying to break the trend line. But at the same time, it's an area where there have been other things about, if you look at what's happening in copper and things like that, it has not been necessarily super strong. If we look over on the daily chart, XLB, we can see here that basically it kind of held the 50-day moving average here. And also, if you look at this move from here to here, it held 50% of that. So these things are all kind of giving a sense that this is starting to get more interesting. However, or starting to get more bullish. However, I think it's important to realize that the level that a lot of people might be watching here is more for a close up somewhere in this area, closer up to 93.25. Now, what's interesting about this chart is it's very similar to the XLI. And the XL, both of these are cyclical, and you can see you're both in these sideways channels. So people might be now starting to think about, do we get a breakout from sideways ranges in the XLB and the XLI? And I think that might be kind of the signals that people are going to be looking for in names like this. And I think that, the thing that just kind of grabs my attention most of materials, like I said, is, China is not doing great. And we've seen the situation in copper. So I think those are situations to remember right now for materials. But I also think it's important to realize that this, it had this signal when it broke out of a range, closed at that weekly high back in February, and then continued higher for several weeks. So the question now is, does it get back up closer to there? The stock, there's this thing around 91.5. The question is, people looking for, kind of signals might be looking for something like a close up toward that level and then look for kind of continuation. And it's not there yet. So I want to just kind of point that out. All right. XLC is communications, which is Meta and Alphabet. And this is interesting now because now we're back on the weekly chart of the XLC. And if we look here, it's holding 84, 81.5. This was a high back here at the beginning of April. Also, throughout this period, if you look in early June, it was some lows. So we had a false breakdown under that level and it kind of held here. So it's kind of interesting to see inside week following this plunge that holds. Last week on our Market Trends webinar, we were talking about some hammers forming on things like the NASDAQ and the semiconductor index. This is similar. These are similar because these are large cap growth. So again, this is kind of interesting. If it kind of holds this level here, at the same time, bullish inside week is something that could be that kind of intermediate to longer term, continuation pattern. When we go to the daily now, we have a similar situation. The 10-day moving average is coming down, and then you see right around that same 85 level. So if you think about something like this might be something where people look for a kind of just sideways move at 85, and at that time, can it turn the 10-day and then kind of continue higher? Or does this become a spot where the 10-day becomes resistance and then we see a continuation to the downside? So I think it's important to realize here, this is a Monday. And so at this point, we don't really know if it will form an inside week. So this is something I think people will watch. And also the kind of, the message is that it's something that people will watch more than acting on in the very near term. So that's the XLC communication ETF. XLE is the energy ETF. Now, if you look at XLE here, it has a few things that I think are interesting. Of all the ones we look at, this was the one that might kind of have the most kind of negative signals, because if you look, this was a high back here in September of 23, and then you can see that it tried to get above and failed. And then this is something that people might kind of start to think about as being a bear flag on the weekly. Now, don't forget, there's the OPEC Plus meeting this week, and they're expected to basically let production increase. That's what they've signaled. Have been signs of weak demand for things like energy. So again, this is something here where people might be kind of, aware of that scenario. If we go over the daily chart, there's also some things here that might be kind of tricky. If you look back here at this level from May, what's interesting here is early May, right around 92, does this become resistance? Does this become 92, this level? Does it become a new weekly high? That might be something to be aware of. Weekly high, lower weekly high. That would be potentially the first part of a bearish flag. It goes up, it makes a low, higher low. I mean, a higher high, it makes a low, higher low, higher low, higher high, lower high. That can be the first part of a bearish flag setting up for a resolution to the downside. Same thing with a bullish flag. You see it make, lower highs and lower lows for a period of time. Then it makes a higher low. And then the question is, does a higher high follow the higher low? And then it continues in that direction of movement. In this case, this is something that might actually be the beginning of a bear flag. I think it's important to kind of realize that in the XLE. All right, continuing here. XLE, XLF financials. Okay, now this is interesting because we've talked about this a lot. We had a bullish inside week right here in the financials above the old high. This is now in new all-time high territory. This is kind of flirting with other parts of the market as now being the top performing sector so far this year. I'm not sure exactly where it stands at this moment, but as of Friday, it had surpassed communications to become the top performing sector so far this year. To me, financials are kind of interesting because you have the situation with interest rates, but also there's a lot of conversation about Wall Street coming back, IPOs, M&A, that kind of securities issuance, net interest margins. If you look at banks, we've talked about this a lot on market trends, but we have seen a kind of continued sort of improvement in, in the banking industry, and we've talked about that in different ways. So, I mean, there's a lot of things here where people look at the XLF. There might be some potential to kind of, have a fundamental sort of outlook on financials here. So I think it's kind of interesting. When we look at the daily chart of XLF, we can see some other things. A very sharp improvement of relative strength. This is relative strength against the S&P 500. We see MACD improving. So these things here, I think, do grab some attention with the XLF. Go to the XLI Industrial ETF on the weekly chart here. And what's interesting about this one is a new record weekly close on Friday. What did we say about materials before? So this might be giving that signal that materials gave back in February and that, healthcare actually gave not that long ago. I mean, I know it's boring, but healthcare closed at a record high. We're going to get to XLV, but look back here in the beginning of July, closed at a record high, chopped, continued. And so now I think we get back over here again to industrials. What do we see? It closed at a record high. It also made a higher low. It broke this trend. This is a really tight range here on the XLI between 120 and 126. So I think this is kind of interesting here. If you look on the on the daily chart of XLI, you can also see here the way it broke down, held the 50-day, and bounced at that level. You can also see some of these levels here around 123 kind of became support. Old highs of this range became kind of, a new low. And it's interesting here is this was kind of throughout the first half of June. Some of you look at the weekly charts, you'll look at a period of like the half of a month as a kind of 2-week period. These are sort of weekly patterns, and it's interesting just to see that it goes down and gets stuck under 123, then it snaps back, has a quick dive, and then holds that same level. So anyway, XLI there. Now I go to XLK, and if you look at XLK, it had a really sharp sort of plunge. It's taken out some weekly levels. Again, it's trying to form an inside week here, and it's also trying to hold this level from early June around 214.75 ish. And I think it's interesting again to see, does it form an inside week here? But that's the question. It's Monday, and that's something where people might kind of watch, with no big rush, just to kind of watch and wait and see what happens. But then also realize that if it does confirm as being a bullish inside week, then there's people who say, you know what, this is in an uptrend, and this is something where now we're getting some potential confirmation of a bullish uptrend. So we go to the daily chart, you can see here, it might give a little more sense of what's, could potentially happen here. Again, we have that falling 10-day. It looks very similar to the communications ETF. And again, the question here is, do we get some sideways movement as the 10-day comes down? Can we flatten out the 10-day and then continue higher? I mean, this looks almost identical to the cues that we showed you earlier. That's the XLK. We jump to the XLP. I'm sorry, we got to look at consumer staples, even though, people might find it boring, but we're looking at all the big sector funds here. That's what we're going to do in this webinar on Mondays in our state of the market webinar. But the key thing here is, again, we see that this is in a very tight range. And what's interesting also at the XLP is here it is, inching toward a new weekly close. This is an inside week with another inside week. To me, this is another one that is also, not on people's radar, but has very tight price action. And I think this is just something that it's pushing up to some levels. Again, if this closes at a new weekly high, that's the sort of thing that might start triggering some people's attention in the following weeks. If we look over here on the XLP on the daily chart, we can also see it kind of had this falling trend line. It rallied above and came back to hold that trend line. So that's kind of also a sign that this intermediate term downtrend has broken, and that it is now in a stronger spot. It's about the 50-day moving average as well. So I think right now we look at XLP. There's another one that does not usually get a lot of people's attention, but it is an interesting thing to look at. Now, another one that gets even less attention is the real estate investment trust, but this has been a very interesting chart. Been closing at new weekly highs here. Now, this is interest rate sensitive. It's had a lot of concern about offices and all those things, office vacancies and all these things. But again, interest rate sensitive, closing at new weekly highs. Again, this is one here where, I think the level might really, it's hard to sometimes really know what the real triggering level is. I just want to add this level here, the close from back here in January, at the beginning of February of last year. The close was 40.96. I'm going to add that to my chart. So anyway, I want to just point out this is also potentially in a spot where it could be inching toward those levels where it starts to get people's attention and they say the downtrend is over. So I think it's important to just kind of realize these things are happening on some of these charts. And if you look at something like what the Russell did before it broke out, it kind of did things like this. Not exactly, but it did close at this high, and then it continued. It also had, it's not all the same, but if you look at the Russell on the weekly, it had this downtrend that it broke. So, a lot of these sort of patterns, these things are somewhat rhyming, and they also have the similar interest rate sensitivity. That's the XLRE. It's now been holding. If you look here on the daily chart, XLRE, I actually found this a very interesting daily chart. $40 is, you can kind of look back to this high from March. It was kind of interesting that it held, but it's also $40. That's a psychologically important level. It has this tight little pattern here in the 10-day moving average moving up quickly. I look at the XLRE here, And I think this might be something that is just starting to get on people's radar. And it also could be just as much as the IWM or the RUT. It could be just as much of an interest rate play. It might be more of an interest rate play than something like the Russell, because the Russell has things in it like biotechs and stuff like that, that who knows what's going to happen with some of those. So anyway, I want to just kind of point that out, that real estate here is, I think, kind of just sneaking up on people potentially. Look at XLU, utilities. This has also been something that's been interesting here, because what's interesting about this is the utility ETF basically pulled back to this high from July here, and it held. This thing had this kind of crazy move back in April and May that really caught some people by surprise. They said there's AI demand for power and stuff like that. And that might be true. There's also a lot of other things where lower interest rates are good for utilities. There are other issues. I think when you really dig into the surface, they had different kinds of ESG, clean energy exposure. They had a lot of under the hood stuff happening with these names. But the key thing is they had a really strong move to 52-week highs. Now pulled back to hold that old high, and it also made a 50% retracement of the move. Again, that is an interesting sort of pattern that might suggest that this pattern or this trend is, has the potential for continuation. XLU here on the daily chart, we can also see it's holding above that 50-day moving average. Now, it doesn't move a lot, but I did want to just point that out, that this is also kind of a similar sort of thing. Not quite as much as something like real estate, but the XLU had an interesting move here, and it turned some people's heads back here when it had this rally. And I think this might be something that, is quietly one of those trades that in the second half of the year, people might be like, wow, utilities they're doing well. I never thought about utilities. That's sometimes what you see. And that's why we want to do this webinar, to focus just on these weekly patterns of the key ETFs and sectors. That was the XLU energy utilities ETF. XLV healthcare, another weekly close, weekly record close there, and then basically chops a little and continues. From my perspective here, healthcare is one of these things that also, the thing about healthcare is that it is a major blue chip industry, and as people look to shift away, if they are saying, hey, I need to lighten up on my tech exposure, healthcare is one of those kind of obvious sort of sectors. What's also interesting is that we have seen increased utilization. We talked about this in the last market trends. You can look into it. The GDP report showed strong healthcare demand. Look at HCA and UHS. Those are hospital stocks that had strong quarters with strong demand for medical services. So these things are compatible with this. We've also talked at different times about the growing number of workers in the healthcare sector. That all these are signs pointing to secular growth in healthcare. And it's a stock that it's a sector that's just sneaking higher. It does not get a lot of attention, but here it is, inside week following a record, close last week. Again, it also bounced at that old high from back in February. So look here on this, you can just kind of see as well. I mean, I didn't draw the line here, but you can see this level right around kind of 148. You can see the relative strength has shown a real improvement, and MACD is rising. This is something I think that, is, just kind of, again, could start to catch people's attention. Wow, I didn't know healthcare is hitting new all-time highs. I didn't know that. And when it's higher, this is why we look at this on this in this approach of the weekly sectors. Now, getting to the XLY, this one is really thrown about by Tesla. A lot of crazy stuff with Tesla that's been happening. But again, it's interesting to look at the XLY because we have a high here from back in February. I mean, Tesla had an upgrade today, but they've had a lot of different back and forth with all sorts of things with electric vehicles and robo taxis that at some point might come, and a lot of things about Tesla that make it a complicated, company to understand. That's what I mean about crazy stuff in Tesla. But the key thing is that here we have 185 on XLY, and you can see here again, we dove down to this weekly low from late June, and we held, and now essentially we're trying to build support at the old resistance, an inside week as well. So I think we look at something like this. This is also something that's extremely tight, and you could say, wow, it's going to hit the 10-day and push back to the downside, or you could say it's going to move sideways and that 10-day is going to sit and turn. Who knows what it's going to do? But the thing is, that might be the way it plays out. With this falling 10-day, the short-term momentum is, potentially bearish. but at the same time, that short-term momentum. Long-term, we're sneaking toward, some highs from back here, 2 to 3 year highs. So I think it's just important to realize here that this is something where people might look back. If you people truly are bullish on Amazon and Tesla over the long run, this might be something where people look back at the end of the year and say, that was maybe a potential opportunity. And how did we know it? Maybe it was seeing it hold 185. Maybe it was seeing it form an inside week after a 2-week pullback. So I think that's kind of what I'm trying to just mention here. So again, I think the 185 level on the XLY might be the area that people have a focus on. And then let's see what happens. That 10-day moving average comes down. All right. So those are the main things that I'm covering here. And let me just quickly, I want to just mention in this actual article here, some of the things that were interesting was that it was interesting to see, this incredible strength in certain stocks like Mohawk Industries and 3M and stuff like that. It does show there's a certain degree of interest of people moving away, and looking for value stocks, looking for turnaround plays. Names like 3M, and Bristol Myers. These are potential turnaround plays that have basically been, chopping sideways here. So anyway, that was the, these are names that have been dead in the water for years. And now there's been, people coming back to them. Now, the last thought I want to share with you is that when interest rates went up in 2022, we saw mega cap tech stocks struggled. And then energy did well for a while and stuff before they all rolled over when we entered a short bear market. Now we actually see mega cap stocks struggling as people look for interest rates to move down. So I think what's interesting now is that instead of people now running away from tech stocks, in many ways, the way to interpret the last few weeks of price action could be simply people running to financials, industrials, and these other potential areas. And I think that's an important way to look at that, is that what was bearish in 2022 in terms of people selling mega caps, in many ways, it might kind of look similar this time, but it's actually for the very opposite reason. It might ultimately be something that over the longer run, proves more sort of positive. So anyway, those are the main things I wanted to cover. We're going to do this every Monday at 3 p.m. And we're just using these charts. Remember, the key thing we're focusing on this is, what are the big indexes telling us? And then on Thursday, we're going to be looking at what are the stories, what are the actual, the price action, what are the trends that are coming up. So we just kind of break them apart like that. So I really want to be able to focus on the big indexes. Hope you guys do well. We will see you on Thursday on Market Trends, which is at 2 p.m. on every Thursday. Go to TradeStation.com. Go to the Learn section if you want to sign up for that, or watch it on YouTube. Thank you so much, and we'll see you next week. Or see you later this week.